Hello everybody, it's Joe Fahmy with a video comparing the Nasdaq Composite of 20 years ago to the Nasdaq of today. As always, these videos are presented for informational and educational purposes only. So I'm starting with a chart of the Nasdaq Composite from 20 years ago, and I'm going to try to break it down into 4 simple steps. Let's go to a weekly chart. Step number 1 is a prior bear market. It started after the dot-com collapse and continued after 9/11. Step number 2 is a bottom in early October of 2002. Step number 3 is we consolidated and started to move out of that range in April, May of 2003. And step number 4 is a new bull market that with strength into year end that held the red line there, the 10-week moving average into year end. When I move on to a daily chart, I can review those 4 steps and we can see a lot of similarities to today's market. You have a prior bear market, just to review. That's step 1. Step 2 is we bottomed in October 10th of 2002. As they say, history doesn't always repeat itself, but it tends to rhyme. I'll get into that in a minute. Step number 3 is we consolidated with this handle area and we started to emerge and stocks started to set up in April, May of 2003. Now, even step number 4, the strength into year end, amazing similarities. As we started to emerge out, the first visit to the green line, the 21-day moving average, was after the May options expiration back in 2003. The second visit to the 21-day was after the June options expiration. We had that seasonal strength as we're having now in early July. And into year end, depending on your time frame, we were in a strong uptrend with normal pullbacks along the way. Now I reset the charts to today to show you the amazing analogies. Prior bear market in 2022. We bottomed on October 13th of 2022. Again, history doesn't always repeat itself, but it tends to rhyme. Just a reminder, that was that peak CPI report. In my efforts to educate you, keep in mind that the market is a discounting mechanism. It has a mind of its own. It trades on what's going to happen 6 to 9 months from now. So the market knew that that was peak CPI and that subsequent reports would come out lower and inflation would come down. I digress. Step number 3 is we have a consolidation with a handle area that's formed, and we start to emerge out of this area in April, May of this year. Continuing with the analogies, we break out. The first visit to the green line, the 21-day, was after the May options expiration. The second visit to the 21-day was after the June OPEX, and so far this year, that seasonal strength into early July. From here, my humble opinion, this is not investment advice, is that we're in a new bull market. We're going to continue with strength into year end with normal pullbacks along the way. It might be similar to 2003 where you get that seasonal weakness in August, September, which are traditionally weak months. But again, we'll take this day by day. If you're looking for more content and more analysis like this, I'll include the link to my educational product below this video. I do weekly videos twice a week breaking down the markets, such as I'm doing now on the website, and I do regular live webinars for members. In fact, the next one is this Monday, July 17th. So thank you for tuning in. I hope you found this video educational, and good luck with all your trading.